Hey, welcome back to Drawbridge Finance. My name's Levi Woods. I'm not a financial advisor, and this is not investment advice. This is how I do it. This is some of the things that I do to try to make more money every single month. And my goal is to retire young and live off of my investments. And if you guys have followed my channel for a while, you've probably seen my video, Time in the Market, Not Timing the Market. And basically, what we're trying to do all the time is make as much money as we can off of our investments. And sometimes we have to buy investments. So you've probably all heard the adage, like buy low and then sell high. And as a dividend investor, I'm investing in stocks that don't really move all that much. So they don't have a huge volatility. They're not going up and down every week. I'm buying them. Next month, they're probably going to be trading at a very, very similar rate the following month and subsequently the following month. I mean, that's really what I'm looking for. I'm looking for stocks that have a very, very slow incline and that they pay a regular high-paying dividend. And when I say high-paying, I mean like 6 to 9%. That's my goal, 6 to 9% off the dividend. That way, if the company's stock value goes up a little bit more than that, then I make some extra money and I make well over my 7% per year. But you have to have an entry point at some time, and I want to talk about that today. I want to talk about how I time the market and when to make my purchases. Now, of course, most of my purchases I immediately put in as a drip. So I'm constantly rebuying stocks with my dividends on a monthly basis, and I pay no fees for that. And I've talked about drips a lot before. But if I am going to open a new position and get a couple more stocks over and above my ones that are just regularly dripping, then I have to figure out when I'm going to buy those. And so although the stocks that I trade don't have a huge volatility, they do have some volatility. So what I look for is I have a setting on Google Finance and on every one of my stock positions that I'm watching, and I set it as a simple moving average on a 200-day period and then on a 50-day period. What I'm looking for is I'm looking for those times where there's been no bad news. It's just a regular time in the cycle where the stocks drop below that 50-day or below the 200-day moving average. If I can get below both of those, I'm doing something right. And that's kind of my target opportunity. So if you definitely below the 50-day moving average, preferably below both the 50 and the 200-day moving average, that's your entry point. So you're going to just purchase a few more stocks, and this is cumulative. So once you've got your 20 or 30 companies that you like to buy that are paying your regular dividend, you're just going to keep investing in those. So you watch for those entry points, you put more money into the account, and when the entry point hits, when it's under that 50-day moving average, especially if it's under that 200-day moving average, and there's been no bad news, that's when you're going to want to make your purchase so that you're getting the lowest possible rate in its normal trading range. I hope that makes sense to you guys. If you have any questions on this, please leave a comment below. Remember to like my videos. It helps me out a ton. Let's get rich together. See you next time.